All right, everybody, welcome back. We're about to kick off our next discussion of the day. If any of you want seats, there's a few seats still here. Feel free to get comfortable. We just heard from some corporates who were able to share some really compelling stories about the challenges they face, the friction that still exists in terms of the payments experience for them and their companies. Now we're going to transition to hearing from the bank side. And the title of this conversation is Follow the Flows. We'll hear from some of the banks that are working with Ripple and some of their experience as they lean in and try to address some of the pain points they know their customers and their colleagues are facing. So with that, I'm going to introduce a colleague of mine, Dilip Rao, who is the Managing Director of Asia Pacific for Ripple. And I will let him come up and introduce the rest of the panel. Dilip, welcome.
Thank you. Thanks, Eric. Good afternoon, ladies and gentlemen, and welcome to the next panel session. A pleasure for me to moderate this distinguished set of people from various banks around the world. Just a quick introduction. So my name is Dilip Rao. I'm Managing Director for Ripple for Asia Pacific and MENA. My role is working with banks to engage them in the Ripple journey. So the focus for this panel is really to give you an idea of the journey that these banks have taken and perhaps find similarities, commonalities of interest to you. But I'll do a quick round of introductions. Ed Metzger from Santander Bank, Dr. Arak Sutibong from Siam Commercial Bank, and Takashi Okita from SBI JV Ripple Asia. To preface the session, I just wanted to tell you a bit of history. I am now an old Ripple hand. I started back in July of 2014, when there were about 30 of us, and the Bitcoin frenzy had just started in terms of panic. Not any buying, nobody was buying it. People thought this was the devil incarnate. And banks' first question was about XRP, or the currency that Ripple had, and what the similarities or dissimilarities were to Bitcoin. When I went to Sibos in Singapore, by that time we had actually built a solution that banks could use to make payments with each other. But all the questions from banks were about, how does this work? So people wanted to understand the tech. Very interestingly, in Geneva last year at Sibos, the questions were about what can we do with this technology? And frankly, that's the right question. And the banks that you will hear from this afternoon have been through that journey and figured out what to do with blockchain or distributed ledger technology and applied it to real-world problems in their own countries, in their own marketplaces. So what I'd like to do is to start off by having each of our panelists tell you a little bit about themselves, their bank or company, what payment trends you might see in your own markets that led you to saying, hey, maybe there is a problem, maybe there's an opportunity for me to address with this kind of technology. So with that, I'll start off with you, Ed.
Thanks. I'm Ed Metzger. I lead the technology innovation function at Santander UK. The Santander Group is the biggest bank in the Eurozone, and we have a very good spread of activity across 10 principal markets. We focus on retail and commercial banking. We are mainly concentrated in Europe and Latin America, although we do have a bank as well in the US. And I think our context is because we are quite a well-balanced bank. We have, in each market, we tend to have quite a sizable presence in the local market. We have probably quite a unique situation. And leading on to the payment trends, I think one thing that we see is generic payment trends, and I'll talk about those in a second, but the other is our particular situation of having these banks in 10 different countries. And obviously, that particular point is really important because when we think of payments and international payments, we don't just think of connecting to banks outside of Santander, but we also think about how to connect our banks in the Santander group so that we can offer a true Santander experience for our customers, be they retail, be they corporate. And that, for us, is really important. That might not be so important that for a bank that, say, is primarily domiciled in one country. In terms of payment trends, how did our Ripple journey start? Well, our Ripple journey started in Europe. And the reason it started there was what we've seen in recent years is an acceleration of disruption in terms of international payments. And that comes from two sides. One is a supportive regulatory environment for disruption. But the second is simply that we have some centres of fintech in Europe. And in particular, the reason why I am here today is I'm part of Santander UK. And in Santander UK, what we've seen is, compared to most of the territories where Santander is, disruption is really far advanced. So we have some significant fintech competitors that have taken large chunks of the market. They offer, I think, what is universally acknowledged as, very good level of service. And I think one of our challenges was then to think about how do we match those kind of propositions and then actually overhaul them. So that was the trigger to start thinking about what is it that we could do to improve our international payments proposition. And Ripple came along as one of the answers to that puzzle. And that's when we started working on some proof of concepts that we'll probably talk about later, where we then, we were able to demonstrate that we were able to address some of the customer pain points that we'd seen demonstrated by the rise of the fintechs.
Great.
Okay, thank you. So my name is Raksitivong. I look after strategy, corporate development, and emerging disruptive technologies for the bank. A little bit about the bank. Probably most of you don't know us. Siam Commercial Bank, we are the largest local bank in Thailand. We are a universal bank, so we cover all the segments from retail all the way up to corporate MNCs and across all suite of financial products and services. Thailand has about 65 million people, size of Texas in terms of land mass. We have about 14 million retail customers, so a relatively good footprint in that sense. What we are seeing, what we have been actually seeing over the past couple of years is that technology is starting to affect and reshape the landscape of banking industry in Thailand, and especially for payments. I think what alarmed us at that time is payments started to move away from banks. Right? We have a lot of fintechs, we have a lot of non-banks started to provide payments, which traditionally you would consider banking services. So that sort of prompted us to ask the question of how do we then prepare for such changes. And we had a lot of initiatives. Recently we started, about a year ago, we started what we call a digital transformation program. And one of the initiatives was to actually set up a venture capital arm for the bank. And that venture capital arm is supposed to scan and look for technologies. And one of the technologies that we came across was Ripple. And that was towards the end of last year. And that's when we started to look into technologies and to start to see, not only understand what blockchain, what DLT would mean for banks, but perhaps what can we actually leverage it for. And we came up with a couple of use cases that I'm more than happy to share a little bit later in the program. And we can say how we solve some of the problem using some of these technologies.
Thanks, Arak. Okay, Tassan.
Good afternoon, ladies and gentlemen. Thanks.
Good afternoon, ladies and gentlemen. I'm Takashi Okita, the CEO of Ripple Asia, the joint venture between the Ripple and the Japan fintech giant SBI. So I'm very excited to be the part of the Swell, the first Swell today. Also, very excited to talk about the future with this great panel and great audience. So let me first a little bit about my company, Ripple Asia. So the SPDP issue is a joint venture that established in May 2016, last year in Japan, with aiming to expand the Ripple network to Asia, the particular in Japan. So I believe that it was the best timing to start the activity in Japan because the Japanese regulatory FSA, Financial Service Agency, yes, so the FSA just amended several laws to support the fintech innovation in Japan. So, for example, in terms of the modified and legal system, FSA amended the Banking Act last year, so that it was just after the next month that we established a company. Also, it was the first time since 2000. Also, the FSA amended the Payment Service Act, which allowed the non-bank financial institution to provide low-value payment. So that under this law, SBI, several years ago, the SBI made the low-value payment solution provider that named SBI Limit. And so that is thanks to the great cooperation with some commercial bank. So the SBI Limit has already started real money transaction using blockchain technology, Ripple solution. So today the subtitle of the Swell is that the future is here. Yes, the theory, the future is here. The future is our hands. So that I'm so great to make such kind of the first step of the great journey. So I would like to introduce another activity in Japan called the Japan Bank Consortium. So with the follow window, we established the Japan Bank Consortium last year, October in 2016. So originally we established the consortium with 42 original member banks. However, now the Japan Bank Consortium has 61 banks, which covered more than 80% in terms of the asset side. So, now we are trying to move forward the production within this Japanese financial year, ended next March 2018. So the Japan Bank Consortium is now trying to use Ripple solution not only for cross-border transaction, but also for domestic transaction. Japan is still cash society. In terms of the cashless issue, Japan is unfortunately behind the U.S., China, Korea. However, I believe that Japan we can break such kind of the cash society that using the game changer technology, blockchain.
Thank you, Kita-san. So it sounds like two different perspectives here. I mean, clearly for both Santander and Siam Commercial, you saw a change in the marketplace, a potential loss of market share, the rise of the fintechs, and in that exploration, I guess, found this happy marriage between what the technology could be applied to perhaps pull back and win back some share in your markets. I think, Okida-san, in terms of your description, it sounds like some regulatory changes were also the driver here. Obviously, some fintechs as well, but SBI Remit, which is kind of the first client to go live, is a non-bank. So they're actually the barbarians at the gate, if you will, who have adopted this technology. But curiously, in your case, you actually brought together a large number of regional as well as large banks together to explore it. So that seems to be a different dynamic where people are collaborating to explore this technology, which might be a cultural difference as well, perhaps not as competitive as in other parts of the world. But I'm curious to drill down a little bit further. Often, blockchain has been accused of being solution looking for a problem, and just vendors trying to sell wares or the next new thing. So I was interested in each of your cases, how you actually discovered the right problem to address with this technology. Because frankly, I'm cynical when it comes to tech. I've been around it far too long, and sometimes a simple database will do, rather than having an enormous, complicated consensus network, to solve this. So how did you arrive at that? And if you were coming from the innovation strategy end, how did you engage your users, the business, sponsors within the bank, to say this is a worthwhile problem to solve with this particular technology?
Okay, I think I'll cover two different angles. So first of all, I'll talk about what was the promise of Ripple that attracted us. So the customer problems that we identified were time it takes for international payments to get to destination and the uncertainty of when it arrives and how much arrives, so due to lifting fees, etc. Now, Swift, works very well, and for many uses, I see it as having a very good future. But there are absolutely use cases where speed and certainty of amount being delivered is important. And certainly when we look at our initial use case was actually around the retail space. And why is that? Well, in the UK and now in Europe, we have an instantaneous domestic payment system. So people get very used to, in their either as companies in their private lives or directly as retail consumers, they get used to instantaneous payments. And the push was therefore, how can we match that in the world of, or much faster payments, how can we match that in international payments? So that was really, when we look at what problem it solves, it's speed and certainty, because you're connecting directly to the receiving entity, and that's obviously the thing that appealed to us. I think your comment, despite my job title, I'm somewhat of a near-fandral myself as regards technology, and I think you made a really good point, which is there's an observation that says, why do I need this kind of very advanced technology? Why can I not just use a database? And I think that was the other thing that appealed about Ripple, because payment networks derive their utility from ubiquity. If I was Alexander Graham Bell and I invented one phone, that has no utility whatsoever. I need to be able to reach other people. And obviously with an international payments network, what you need is lots of endpoints so that it's useful for your customers. You have to give them a decent service. And clearly, the normal reaction of building something internally, yes, it solves some use cases, but actually what you need is ubiquity and acceptance. And the positioning of, say, Ripple in that space is obviously very attractive. So I think, we had very particular customer problems that we wanted to solve, and Ripple is one way to solve them. And against building something from scratch, the winning card there is about how we see a network growing in the future. If you can't have a network, then the innovation is not that useful. So it is the network and the drive to a network and its openness which is the key.
Great.
Okay, so I guess I'll answer the two questions. One is, what's the use case? And the other one is how we got our company or our bank to adopt the use case, right? The use case for us, is cross-border inward remittance from Japan to Thailand, and this is actually similar to what Chairman Bernanke was referring to this morning, where we have a lot of overseas workers, right? In fact, if you look at statistics, inbound remittance into Thailand, the top 5 countries are the U.S., Germany, Australia, Japan, and then Malaysia. Then we kind of asking the question, admittedly in the beginning, we are indeed looking at Ripple as a solution, looking for a problem to solve, right? Because we want to actually explore and experiment what it means. So we started looking around and say, what are some of the challenges? Turns out that, Thai migrant workers in Japan or in any countries for that matter, their hard-earned money and cash got sent back home with some unknown in terms of the time, in terms of the amount that it will arrive. Sometimes, T+1, sometimes T+2. The access to the money is also questionable because sometimes, the remittance counter services or banks are not open. So it's difficult for them to actually get the money. And for them, right, because these are overseas workers, when they send the money back home with the full expectation the money will get there on time in full for their family and loved ones. So we started to look around, and fortunately we found SBI Remit, who is a partner over in Japan, were just as committed in terms of exploring and to see whether actually we can create commercial use cases. So the use case before SBI Remit is a remittance company. So the partner that we work with, essentially, it used to be work with the remittance on the other end, right? So a customer will go to, on Japan side, put in the card in the ATM or something and transfer the amount, X baht or the USD or Japanese yen, depending on the currency of your choice, will show up in Thailand, but then you need to go to the counter service to pick it up. What we trying to get around that is by working with a bank, like a local bank for us, we actually able to short circuit the whole thing. We can, instead of T+1, T+2, it becomes minutes, right? People can actually literally go to Japan, put in their ATM or equivalent to ATM card, punch in the amount that they want to transfer, and within minutes, you can actually go to the bank or any ATM machines in Thailand. SCB, our Siam Commercial Bank, has about 10,000 ATM in Thailand, and with our partner banks, we have about 50 or 60,000 machines. So you can imagine a Thai recipient can just go to any ATM machines and get the cash in hands within minutes rather than days. So in that sense, we already solved that one problem. In terms of actually two problems, right, in terms of speed and access. Also, commercially, the fee and everything we can structure it more flexibly because there are now fewer people in the loop, right? We can actually then come up with a more competitive pricing, which actually turns out to be also very well received by the customers. Already we have customers asking, we've gone commercial for 3 months now, so a lot of customers already asking, can they do it for SMEs, not just individuals, can they actually do it for non-SCB account customers? So we already get some traction, and then we can talk more about how we actually get that over the hurdle. Now, the second question, how do we get that adopted within our bank? Admittedly, it was a little bit of underground and a little bit of rogue operation in the beginning, because people not necessarily seeing what it is and what problem we're trying to solve. But in the end, I think once we've gone to trial, once we work on the proof of concept, gone commercial, get accepted by the central bank, people should start to see that, okay, there is value and there are customers getting traction. The scale is somewhat limited today. I think the power of this, as Ed mentioned, is all about network. The moment we can actually create global network with people on the same with the same platform, then I think the power of this thing will really be unleashed. But for now, at least we've gone through stage 1 of clearing that a lot of people now in the bank are supportive of this, and now not asking why, but more like what other use cases can we actually do. There are actually, outside of the bank, we also need to talk to regulators, which I'll touch on a little bit later on. That's also another very important stakeholder when you try to launch new services like this. Thanks for that.
Thank you. So the first one, so that the use case of SBI Remit, so nothing I have to add the comment. So yes, the SBI Remit could send money to Thailand before using the technology of Ripple. However, now it's a real-time transaction. So the people from Thailand working in Japan now they're very easily to send the money back to their family living in Taiwan. Yeah. So the second question is why the Japanese banks accept the concept of the consortium. So there are several reasons. However, the largest one is, of course, changing the demand of their clients. Yeah, so after the internet, the consumer behavior has dramatically changed. Also, the business client, corporate has already changed. So because of the globalization, currently even SMEs in Japan has offices, factories in China and over the Southeast Asia. So the previously such kind of SMEs didn't have any opportunity to send the money from Japan to Japan to Asia countries. However, such kind of the demand getting the bigger and bigger. While banks has not changed so much, it's due to the old-fashioned infrastructure. So such kind of the demand of the cross-border transaction, particularly the low value, high volume transaction from SME. So another driving force is domestic payment. Yep. So of course, in Japan, we have HH called Zengin. So the currently, of course, the internet is working 24/7. However, the Japanese HH called Zengin is working just on the 7 hours, 5 days. Yeah, so it's quite different from the demand of the user, also the behavior of the people, particularly the younger generation. So the system that we are now trying to build on our Ripple network is, of course, running 24/7. It's naturally. Also, we can put the more future easily on the system. Also, why the Zengin, the current system, has such kind of small few hours working. So the Zengin is however, the Zengin is a very great system. They don't have any system outage since it started in 1973. Yeah, it's a so great system. I do think so. However, by centralizing system to keep it such kind of the high quality, it requires a huge cost, also the maintenance wind. So that is why that we are now trying to create a whole new system on distributed ledger technology.
Thanks, Okuda-san. I mean, I have to say that triggers one of my normal anecdotes when I'm pitching Ripple is still the story of when I sent some money to my teenage son who was on a holiday in Japan, of course, ran out of money as they do. So I sent him $1,000 from Australia, and the Japanese bank charged $150 to credit it to his friend's account. So, of course, I called up my bank in Australia, and they said, well, read the fine print. We have no idea what they're going to charge. This is one of the most expensive in the world, but tough. And that was their response. Frankly, I could have put the money in a bag, but sent it on FedEx. It would have gotten there faster and more cheaply. So I'm really, really happy to hear that there is support for reinventing the Zengin system, solid as it was. And it's a real-time system, but 30 years old. But it brings me to the point of domestic versus cross-border. Domestic is not a focus for Ripple. I think primarily because we didn't want to go out selling to central banks. But I think maybe we do need to talk about central banks because they play a big role, especially in Asia. Whenever I pitch in India or in Malaysia or Thailand, first question is, what is Ripple? Second question, have you spoken to our central bank? So we have a little office in San Francisco which goes out talking to central banks around the world, basically educating them about what it is, and more importantly, what it is not. Because there's a lot of angst about Bitcoin blockchain, and they say, so is it the same thing with a different name? Well, it's not. We really completely reinvented the technology and tailored it for banks, for cross-border payments. So I'm really interested to hear different perspectives you might have from Europe and from Asia on what was the way you engaged with your central bank, what was their reaction, are they supportive, are they arm's length, and obviously there's a variety of views around the world right now, but I was curious if there's some huge divergence of views from across the world. Ed?
Well, I mean, I can talk most about the UK regulator and European regulators, and I think broadly speaking, regulators are very supportive of innovation in payments. They want competition, they want improved levels of service, and the FCA in the UK, who's our main regulator, has been noticeably very active and proactive in calling for more innovation. In fact, we have another regulator, the payment systems regulator, whose remit is to increase competition. So I think that there's a lot of support from regulators. I think it is important, though, as you say, very different thing. One is an improvement to an existing payment service using fiat currencies, which is clearly an absolute winner, I think, for everyone. And the other is the use of cryptocurrencies by banks, and they are absolutely separate in our view. One can happen without the other, and I think that helps the conversation with the regulators. The other is obviously, I think, to have a phased approach. So the approach that we have taken is we have done proof of concept. So we launched a very successful app for staff to be able to pay from the UK to accounts in Europe and the United States. Limited in terms of time, in terms of value, and in terms of the audience. And I think that gives a level of comfort to the regulator that you're doing something that is controlled and that you're demonstrating the value to the customer. So I think, broadly speaking, regulators are supportive of anything that improves customer experience while maintaining security and ensuring that banks comply with all regulations, which I think is another important thing. We take all our responsibilities very seriously, and we use this as a means to discharge those responsibilities while providing a better customer service.
And for us, I think that the learning is, I guess, two things. One is engage them early, and second one, educate each other. Right? These are, from central bank perspective, I think the most important things for them would be stability and integrity of the transactions and of the services that you provide. Whether it's in real time, whether it's cheaper, that's secondary, and they could care less about that. That's more on the competitive side of things. But if you provide services to consumers, the customers, security, stability, integrity of the transactions are most important to them. So that, I guess, we all need to recognize that. And for us, and credit to our central bank, in the past, it's actually quite difficult to get new services, let alone blockchain and DLT, and this is advanced kind of services. Even basic services, right? I mean, for people who have to deal with central bank, you probably recognize they'll ask for papers, consultations, many analyses, many proofs, before you can launch anything, it takes months, sometimes years for you to launch something. But at the same time, our central bank, under the current governor, also recognized that things change so fast, and it's difficult to actually even predict what it will be. So the best way for us is to actually learn together, and that's engaging them early. And what they adopt the concept of using regulatory sandbox, which I believe many central banks are actually doing. And for this particular service that we launched with them is actually under a very limited scope and a controlled launch, right? From day one, our central bank has been involved, and they were very much right then and there in defining success criteria. They would say, what is the system uptime? How long would it take? And all sort of things they would actually spec out in terms of what would be considered a successful commercial launch in the sandbox. So by doing that, we actually shorten the time significantly. We don't need to go and submit to them in terms of proof of concepts or paperwork or anything like that. They've actually helped work with us in doing that. And once we started launching, we started launch on July 1st. So it's been 3+ months now. And we're actually about to file for an exit from the sandbox. The regulators actually been quite happy with this so far, right? I mean, we pass a relatively strict and stringent criteria. The uptime is like 97 or 98% plus. We actually fortunate enough to clear that with flying colors. So in that sense, I think what we have also learned, and regulators also recognize this, is that, look, in the end, I think have an open dialogue and you actually work with them as partners. And if you are in their shoes, they're actually more concerned and more nervous about new technologies compared to us, right? We are on the commercial side of things, we can try to launch and experiment. If things don't work, we move on to the next thing. But for central bank, they need to actually define proper policies and frameworks that will actually then govern other things. So in that sense, they are understandably why they would be hesitant and nervous about these kind of things. But by working with them, we in a way actually help shape the policies of what they should be. And along the way, we recognize the concerns and try to adjust along the way. Of course, having technology partner such as Ripple, who's also committed and investing a lot of time in talking to regulators. In fact, you guys probably talk to regulators before we do. We did back then. So in a way, it's already get the ball in motion. And now variations of things, they start to be corporate transfer and all those things. Things become a whole lot easier. But I would still say that for this journey is still a beginning, right? As I mentioned before, the success of this thing is not just sending money from SBI Remit to Siam Commercial Bank. It's really it can only be successful if you manage to build a global network, which of course requires and engage many more people, and then we need still to learn. But at least one step is successfully made. And so hopefully now the question is how do we scale up at scale, fast and at scale.
Yeah, so in terms of the regulatory in Japan, as I introduced, Japan's FSA is very supportive to adapt a new technology, particularly the game-changer technology, blockchain. Yep. However, the banking side, the private sector, so the banking industry, yes, with such kind of the momentum, most of the bank had interesting to use blockchain technology. However, I guess that if the Ripple requires banks to use cryptocurrency, so some bank might might hesitate to use a Ripple solution. However, as you know, that the Ripple solution, yes, the Ripple solution provided the using the XRP as optional. Yeah, that is important. That if the banks have to use the cryptocurrency, so if it was, so even with the momentum, the bank hesitate to use the new technology. But so that this kind of the flexibility of the Ripple solution is very good for Japanese bank to adapt that new technology.
Thank you, Kita-san. So certainly, I think there's clarity, and I deal with India, and it has to be one of the toughest regulators. Banks in India jump when the RBI tells them to. And their view was this is simply a technology solution that the banks will use to conduct business between licensed institutions. There's no change in the business model. It has been delegated to the banks. They don't need to ask us for permission. And that was kind of a huge win for us in terms of being able to go back to banks and say, look, you don't have to worry about the regulator. You can have a chat with them in any case. But it doesn't look like, as long as you're not using crypto, that there's going to be anything that will stop you from using Ripple. So I think making crypto, as you said, an optional extra was a good strategy. It might slow it down in terms of its adoption, but frankly, we get it right first time will probably be a good approach. I want to hand the session back to the audience for some questions, and then we can come back, to wrap. So I'm really happy to throw it open, and anybody have any question for any specific panel member, please raise your hand, and we'll have a mic to you.
Yes, I'm curious as to the actual working mechanics of between SBI, Remit, and Siam Commercial Bank.
If you could also just introduce yourself,
sure,
that'd be great.
Sure. Dr. Henry Balani with Acuity. As I said, I'm curious as to try and understand what the actual mechanics or underlying mechanics of the actual framework that you're using to be able to do that. That's number one. And number two, you said that it was still in the regulatory sandbox, and now you're moving out of the sandbox. So is this a commercial production-ready application? I'm just curious as to how we define this.
So let me address the second one first, right? That's the, I guess, the progressiveness of central bank in Thailand, right? Regulatory sandbox doesn't mean it's just proof of concept. It's actually a commercial launch. But it's in a very controlled launch where we need to define clearly what services we need to provide, but it is commercial, right? So the government will say, fine, according to this, for instance, we could not then replicate this in another corridor and say it's the same thing. The government say, unless and until they are okay with this particular one, which usually takes about 2 to 3 months of the actual commercial launch, then we can actually do it. It's a little bit, I realized too, the first time I heard them, I was like, but are you sure that if you're in the sandbox, but this is commercial, this is real money, right? Going through the corridors, that's the intent. Because otherwise, it is going to be just in a lab, right? In terms of technology, I might not be the best person to comment. I'm sure there are details, but I think we're using the shared ledger approach between the two organizations at the moment, and that's why I'm saying that for it to be scalable, we need to actually move on to using the full RippleNet and all the whole program. Right now is still very much ability to actually do a real-time transfer because we're using the shared ledger in that sense. So it's proven, I think, part of the whole thing, but it's not yet, at least in our mind, it's not yet fully, I guess, I would say still the proof is still a little bit out, but at least that's my perspective. But so far what we've seen is actually encouraging and positive. It's a matter of how do we scale up further, because as I already mentioned, we already talked about perhaps working with other partners in different corridors. We have identified some partners in Germany, in Australia, to actually replicate the same thing. But once we get larger network, then we can actually try to do a full-scale launch. But I don't know, Okita-san, do you have any comments in terms of the arrangement that we have, perhaps from the technology perspective? That's what you're referring to, right?
It's infrastructure.
Okay.
Yes, so the mechanism between the SBI Limited and commercial banks, so that the technically the both banks are using the X-current solution, so that the solution based on the intelligent protocol. Yeah, also that in terms of the liquidity, yeah, SBI Limit now that makes a deposit on Simon Commercial Bank. Yeah, so they are using their own liquidity now. But also the future, the XRP, it might be the answer to create the liquidity instead of their own liquidity.
Take other questions?
Robert McKay from Acuity. You spoke of the business problems being solved when there's ubiquity, reach, certainty, and I'm struck, when is critical mass in the network reached? If I use a US example, 55% of the accounts are held at a dozen banks. The other 45% of the accounts are a very long tail, 18,000 banks. How does the group view critical mass being reached outside of that kind of core?
I think that's a good question. I mean, I think we were talking about how do we build out this network, and I think you might have some views.
I think from our perspective, what's important is coverage in terms of what's important for us is thinking about coverage in terms of currencies and then how to reach as much of a financial system within a particular currency zone. And the reality is that to get all of the banks, for instance, on the SWIFT network onto Ripple is just going to take forever, right? So what we need is to think creatively about how to do that. And I think there's several ways of doing that. So one is how we did our initial staff launch, right? So we actually use a third party called Earthport. So we send money through Ripple to Earthport, and they provide a commercial service where they then onward forward that transaction. So we send, say, from the UK to Spain, and then they send it on the last mile within country. So that's solution number one, right? Solution number two is then to do that rather than third party, effectively do that with a partner bank. So they provide the same service. And then finally, I think the third way, which is now, I think, one of the avenues that Ripple are pursuing, is thinking about the concept of anchor or hub banks. And I think, if we think about how SWIFT works, actually, we as a bank are not connected to every single bank in the world, right? We use partners to get there. So I think that's very much the same approach we have to think about here in the world of blockchain. And I think if you think that way, then obviously that network is much more achievable than thinking about every single bank being on the network, because I absolutely agree that's not realistic.
I tend to agree. Actually, that by far is the most difficult question in my mind on how do you build that scale, right? I mean, I would imagine if you have nodes or banks in each of the country or major corridors, at least you solve part of the problem. For instance, the case in Thailand, what we are seeing, in fact, is a new business model potentially, so long that you have somebody who's actually linked into the network, and once you get in the network, you can get anywhere in the world. Into Thailand, you can actually then have a proposition that you become that local distribution that can actually reach the rest of the bank in the system. But that hinges on the fact that different countries have different payment systems. For Thailand, we also have domestic real-time payment systems. So in a way, you can replicate the real-time nature of it, but it's not on the exact same protocol end to end. But at least you can get the things moving. And then I believe over time, if people see the same value, then they can start connect directly without actually becoming this. But the truth is, unless and until you can actually capture all the major corridors, this thing is just going to be very niche, and it's not going to realize the full benefits.
I think you actually raised a really interesting point, because I think there's absolutely a completely new business model here that's well worth exploring, which is the concept of effectively providing clearing services from the network. And certainly, we at Santander believe this is a very interesting business opportunity. So, one of the things we're doing now is a proof of concept prior to the launch of GBP clearing, where effectively we can offer service to other partners who want to come into the UK. And I think that for lots of financial institutions is something well worth thinking about, which is how you other banks.
Just to add to I think this is obviously a question that comes up when we are talking. A couple of things that Ripple has done quite successfully. I think one is a corridor in India and South Asia, and saying, where is the money coming in from? And what we found that generally Saudi Arabia and India, UAE and India, that's just for the remittance corridor, and we start to see that going into production this year. And I think that can be replicated in corridors, including for trade. It doesn't have to be for remittances alone. I think the other for us has been clusters of banks and centers, so they've collaborated to get together. In the Middle East, I have a central bank that is actually sponsoring a project which they've invited 4 of the major banks to, and the comfort of the regulators, they will actually be able to try out and start working with Ripple. So I think if you look at ASEAN, over 50% of the trade in ASEAN that ASEAN conducts is within ASEAN. So they don't have to look very far beyond to figure out how to use this. And I think borrowing from the Japan angle, ASEAN is crying out for a regional payments network. They're never going to have a single currency. So you're going to deal with the lack of liquidity that you have currently. But if you can remove some of those hurdles, and Singapore is already doing that on a bilateral basis, but potentially Ripple could come in as a network solution for an entire region. And I think ASEAN, I think Middle East are opportunities where they will leapfrog and get beyond where the rest of the world is using such technology. Other questions? In the last couple of minutes that we have, do you want to take a view on what do you see the future? Where do you think this is going to end as far as your use of Ripple? You started with a use case, you tried out a corridor, the tech works, you established some partnerships, the movements to grow the network are forthcoming. What does Nirvana look like? Where do you think this is going to head?
Well, I think, you actually raised a really interesting point there. You mentioned the word liquidity. So liquidity, I think, is one of the biggest issues when you think about a future network. And I think one of the observations is probably that the model needs to evolve from a corridors, point-to-point model to more of a how we create deep pools of liquidity across the globe and all currency zones. So if I think about what the network needs to do, it needs to address that point about liquidity, and it needs to have size, scale, and reach. So I think where I see Ripple, I think is what well placed. It does have competitors, but it is very well placed, and the challenge is really to move beyond point to point and go into full and deep liquidity.
Completely agree. I think the future is actually quite, to me, unfortunately, I think it's digital, either very bright or not bright at all, right? Very dim in that sense. And two things would be the network and liquidity provider. If we can crack that, or if you guys can actually lead the way to actually crack that, then technologies-wise, we are comfortable. I think we can see a lot of potential. We can see a lot of use case. We will continue to try different corridors. We are in partnership discussion with many things. But as I said, this is only going to be effective and successful in the long term if and only if we can actually build a successful network, which requires many participants and solid liquidity providers, as well as the business rules and the governance around it, right? And we are in the early stage compared to other payment infrastructure, but it's one that I think is worth spending time, and hopefully, we certainly would be supportive of the program that you were trying to set up.
Yeah, so a little different context, I would like to talk about the future. So that the current, thanks to the smartphone that we are sending the text, picture, and even the video and voice with the smartphone. So that yesterday I had a conversation with my 7-year-old daughter from Canada to Japan. So however, in Japan that we cannot send such kind of the huge data such as a video. However, that we cannot send money. Yeah, so in China, so more than 700 million people have sent the value over the messenger. So that it's still the beginning of the friction experiment and also the internet value. However, I do believe that this kind of the internet value era is coming soon. And so at the same time, the lifestyle and the business habits of us must be dramatically changed. Yes, 20 years ago, I started the online payment solution provider. At the time, so that no one realized how internet is important. How no one believed that the people is selling buying goods even in Southeast Asia. So however, now it's similar to the internet 20 years ago. So that not so many people that believe that the potential of that distributed ledger technology. However, I do believe that this kind of new technology created a new era of internet value. So at that time, dramatically, our lives, particularly in Asia, will be changed, I hope.
Thank you very much. So really, Ripple has offered some new technology which appears to solve some problems that you see as compelling and which can win back market share or certainly grow the business. You started off with use cases that were dear to your heart. You've proven out the proof points in terms of customer acceptance, commercialization, regulatory approvals. Now you're looking to scale, and the fact that one Ripple connection allows you to now to make multiple connections, in a couple of hours, means that the tech friction has gone out, and now it's really about innovation. What kinds of vehicles you want to drive on this new set of roads? Is it a Ferrari? Is it a truck? Is it for corporate payments, retail payments, etc.? Really, there is a journey, but with RippleNet, there is a governance mechanism that's been pulled together. The advisory board of RippleNet, brings a lot of major banks to the table who can start to solve these second-order problems now of liquidity and scaling multilateral models, perhaps some innovation around how liquidity is managed and delivered. So I think there is good prospects going forward. But every journey begins with a single step. But thank you very much for taking that first step. So with that, I'd like you to thank the panel.
Thank you to Dilip for moderating, Akita-san, Rock, Ed, thank you very much. One more hand for our panel. Thank you. So we have one more session to go. It was great to hear from our bank partners. Obviously, these folks are leaning in. We value them very much for taking that first step of the journey with us. I think as Akita-san said during the conversation, the future really is here. Stay tuned. The next conversation's at 5 o'clock. We're going to get into digital currencies. We have a panel who's going to talk about how they fit into the landscape, which we've heard a little bit about throughout the first several conversations. And then after that, a special guest for a very memorable wine tasting as part of our happy hour. So stick around. We'll be back at 5 with digital currencies, and then more fun after that.